Alright, what's going on, guys? It's Luke here. Today I wanted to make a quick video going over this trade again from today, and I want to talk about how the market isn't always going to give you what you're looking for. Now, a lot of people today faded this because there was these equal lows down here, and a lot of people missed these longs. And if you didn't take the trade because of that, that's fine. But it's the part of like people making excuses, and saying how these equal lows, like you shouldn't have longed with these equal lows and stuff like that. And it's like, okay, now I kind of got to go over this, right? So let me just go through this again really quick. Market opens up, manipulates up, comes down. NQ fails to take out these lows. We get these relative equal lows right here. They're not exactly equal. I think it was like a tick difference or whatever. So whatever, I'm just putting the SMT like this so you can see it, but NQ fails to take out these lows. We look at ES. ES obviously takes out these lows right here, and they continue to shift up. Now, what happens? Okay, we break structure to the upside on the 3 minute. We inverse this 3 minute first presented fair value gap, which is exactly where I take my entry. I ran my stop below this 3 minute candle right here, and I just saw we had some relative equal highs kind of right here. Break even point was here. I saw this high right here. I seen all this LR leading into the London high, and this is where I took full TP. And I'll go into the Discord where I have the execution so you guys can see I took this. There you go. Okay, so the thing is here, let me just put this replay tool back on. A lot of people were saying, okay, like, I didn't take the trade because of relative equal lows. Again, like, that's fine. If you didn't take it for that reason and that's one of your rules, that's fine. But a lot of people are just, like I said, just making and just saying how this was a bad trade, and this was not a bad trade. If you, like I said, if you didn't take this trade because of your rules, there's relative equal lows below, that's fine. You know what I mean? That's completely fine. But there's just too many people like saying how this is not a bad trade at all. This is a solid trade, and I'm going to explain to you guys why. Again, we have an SMT off these lows. This isn't even the most important part, the SMT. But how many times do you see draws on liquidity get edged and price runs from them? It happens all the time. Like, that's where relative equal highs and lows and equal highs and lows even come from, because the high or low gets edged and then price comes back to it later. Right here, for example, okay, there was a short right here. People probably, okay, I'm not going to short here because there's relative equal highs. What did price do? Came back, came up and took it out later in the session. Okay, then you go over here. We could find this literally everywhere, right? Like, we can go through anywhere right here, relative equal lows right here. Price runs up. Are you going to fade these longs if you see a setup because there's relative equal lows all the way down here? Like, again, it's just relative equal highs, relative equal lows, equal highs, equal lows are a thing because of this. So this is the thing. If you're looking for shorts here at this point, or not at this point right here, let's just say here, okay? If you're looking for shorts at this point, you have these relative equal lows right here. And again, I was in shorts before this and I got break even. You want to see bearish order flow continue to be respected in order for you to want to short again, to take out these relative equal lows. So how does bearish order flow get invalidated? We need to break structure to the upside or invalidate bearish order flow. Okay, so again, how's it invalidated? We break structure up here. We shift from bearish into bullish order flow. Once we shift from bearish to bullish order flow, how do we do it here? We break structure. We inverse this 3 minute bearish gap, which is a bearish continuation confluence. As you can see, it taps into it here and continues lower. We should come back in and continue to respect bearish and continue lower, but we don't. We break structure to the upside. So at this point, we broke structure to the upside. We invalidated bearish order flow. We are now, let me look at this. We're 128, 130 points, 128 points, whatever, away from those relative equal lows. I'm not going to be concerned about these relative equal lows after we already broke structure and invalidated bearish order flow. If we were still in, like, let me say, for example, right here, am I going to long right here? No, I'm not going to long right here because price could have easily, I don't think there was any more gaps here, but price could easily go like this, break right back down and continue down. I'm not trying to turn bullish until this high is broken, because this high rate, this lower high created this lower low. So I'm not shifting bullish until this lower high is broken above. It's just simple market structure. So when we break above it right here, we inverse this gap. We're shifting from bearish to bullish order flow. Momentum is strong, volume is bullish, and on top of that, we have draw right here, draw right here, draw right here, here, into session highs, which is London high. And then we go over to ES and we can see they both have room to run higher. They both have room to run higher. So for me to want to like see this and think I'm not going to short this because I think price is going to come down like this, it doesn't even make sense. You should be able to at least get break even if you wanted to break even at these highs right here. You could have honestly gone break even really quick there and just held. And again, you would have literally been fine. I went break even at these highs because I had conviction in this trade. I wanted to give it as much room to run as possible. But there you go. So if you see structure, relative equal highs, relative equal lows get put in, but structure gets invalidated, order flow gets invalidated. In this case, bearish order flow gets invalidated through this break of structure. Like I said, this lower high gets broken above. We inverse this gap. I'm not concerned about this anymore. We've already broken away from it. I'd only be concerned if we were like still around this candle right here. But as soon as we break structure to the upside, order flow shifted. I'm not concerned about these relative equal lows down here. Okay, here's an example of where I would be concerned about equal lows, which we actually had earlier in the session, and I was actually talking about this. Okay, right here. Okay, as you can see right here, there was like a little opportunity to kind of long here. I didn't take this personally because number one, we were respecting a 1 minute bearish gap right here. Okay, so I wanted to see this 1 minute bearish gap, but you could have said, okay, we got nice displacement to the upside, right? What do we have here? We have relative equal lows right here. Okay, so not only have we not invalidated the bearish order flow, we still need to inverse this bearish gap, but we have relative equal lows that are actually pretty close in this case. And this obviously isn't like a great setup, but you could see right here, we have relative equal lows a lot closer. Okay, and we haven't even broken structure really. Like if you look like it just, we put in a huge rejection wick. We're rejecting out of a 1 minute gap. The relative equal lows here are much closer. Like this is one where I'd be like, okay, I don't really feel comfortable taking these longs right here until we shift above this bearish gap. Now, if we shifted above this bearish gap, broke structure to the upside, then I'd feel confident to take longs. But in this case, I'm not shifting bullish until this gap is broken above. And again, we have relative equal lows here, but they're a lot closer. Does that make sense? They're a little bit more in proximity. We haven't really cleanly broken structure, as you can see. We did here, we broke back into the range and we're just chopping. If we actually break above here, then I'd be more inclined to long. But until we actually break clean structure to the upside, I'm still going to be keeping these relative equal lows in mind in this example. Compared to the other example, the trade that I actually took, you see that we come down, we cleanly break to the upside, we cleanly break above, we cleanly inverse this gap, break structure to the upside, and these lows are much further away. They're much further away, and SMT lows. So to me, this is a lot cleaner of a setup. I'm not concerned about these relative equal lows here because we've already shifted order flow. So that's just one thing to keep in mind. If you are looking for like, how do I explain this? If you see relative equal lows, relative equal highs that are in close proximity to your entry and you haven't shifted order flow, then obviously keep them in mind. But if they're far away, we've already broken structure the opposing way, we've already shifted order flow the opposing way, I'm not paying attention to them. And this was a great trade in my opinion. People could disagree, it doesn't really matter. It ended up playing out, so win is a win. So one thing, again, guys, just pay attention to the shift in order flow. Once you break structure, we shift order flow, we invalidate the opposing order flow. These aren't going to be important. Again, if the relative equal lows were right here, maybe I'd be like, okay, maybe we come down, we fill this gap, and then we continue up. But we're clearly displacing higher. We're displacing away, so it doesn't make sense. And we have draws higher. So I just wanted to go over this video, this trade again, guys. I feel like there's a lot of points to take away. Again, this was a great example right here. Like, once again, I'll look at it. You have relative equal lows here, but we haven't cleanly broken structure. We haven't inversed this gap. So the bearish order flow has not been invalidated yet. So at this point, yeah, I'd keep these in mind. But in this other case, we've invalidated bearish order flow and we've broken away, we displaced away. So it just makes more sense to go higher at that point. And you have to think of yourself as a reactionary trader. When you react to what's shown. In this case, it's showing that order flow is bullish. We're displacing bullish, volume is bullish. Why would I be looking to trade lower at this point? So I just want to get this video knocked out really quick. Thought it was an important thing to cover. Again, if you guys faded this because of these lows, it's not a big deal. Like, it's just your rules. But just say it's a bad trade is just kind of ridiculous. But that's going to wrap it up for me, guys. Hope you guys enjoyed this one, learned something, and I'll talk to you guys in the next one. Peace.